part, I'm familiar with some of the people in here at least. I know that you guys have been studying and studying trading. You've experienced the whole trading journey, the learning part of it at least for a good while. Um, and I want to say, even when you feel like you've made it, not I don't want to say made it, but you're doing well, things can quickly turn on you. So what I'm trying to get at here is you always want to be on top of yourself mentally. Okay, like I'll give you an example, and I'll always go back to things in my journey because I've experienced all of it in trading. I've experienced all the highs and I've experienced all the lows. And I can promise you, even when I'm making the most money in trading, everything can switch up really quickly. Okay, the following week, the next month, like I can have a really big week, a really big month, for example, and then the following month I could be completely flat. Okay, and I could be zero all month. Or I just haven't requested any payouts. I haven't got any payouts in a month. So, the thing about trading is nothing's ever guaranteed. Okay, there's going to be slow days, slow weeks, slow months. That's inevitable in trading. That's just how it is. That's just how the market is. Okay, you're not always going to be performing top notch all the time. Okay, you're human. You're going to be making mistakes, but you'll understand and what you'll get better at is as you progress as a trader, those mistakes will minimize. Okay, well you'll minimize those mistakes. Meaning, if you do fuck up and you take losses, your losses should stay small. They will get smaller over time. Um, right? You won't have those blow up days. Those blow up days are honestly they're inevitable in the learning stages, right? You experience these high levels of emotion, and then again, emotion takes over, and you just start trading with emotion. Okay. I feel like as you progress, for myself at least, as I progress as a trader, um, emotions start really what's the best way of putting this? I don't really experience that much emotion anymore. Um, of course, there's going to be times where, let's say there was a setup I took, I was really confident in, and I take a loss on it, and I can always feel maybe a little bit of emotion creeping in sometimes, which is completely normal. But I've come to that point where if I ever recognize that, I shut it down, right? Like, there's no point of trading, analyzing charts when you're full of emotion. You're going to be making irrational decisions. Nothing's ever going to come good from that. All right. So, another topic I want to get to is for the guys in here that are trading, um, also working. I want to say continue doing that. Okay, you always want to have some sort of money coming in. So whether that's trading and you have another full-time job or a part-time job, that's good. Or you're trading during the day and then after that you're doing some sort of, let's say you're a tradesman and you're doing some sort of side work in the afternoons or at night, obviously depending on your time zones. But you always want to have some sort of income coming in, guys. And something I've noticed is so the mistake I made early in my journey was I left my job too early. I was making money from trading, but the thing is, even though you start making money from trading, it doesn't mean you should be quitting your job, and going all in right away. It makes it very hard, okay? And it puts a lot of pressure on yourself. I can promise you that. I was making money from trading, but then I left my job, which means all my money was coming from trading, right? And that puts a lot of pressure on yourself. So I was smart enough that when I wasn't making a lot of money in trading yet, that I kept my expenses down. I wasn't going out a lot. I sacrificed a lot, to be honest with you. And my girlfriend at the time didn't like that, unfortunately. So obviously she's out of the picture now, thank God. Um, but yeah, it takes sacrifice and it adds a lot of pressure on your shoulders if your only source of income is trading. I can promise you that. The most money I make in trading is when I'm making money elsewhere as well, right? So I have other income streams, which is great, but that allows me to come to the charts with a clear mind every single day. Um, I have next to no pressure on me when I'm trading. Okay, if there's a setup in front of me, I'll take the setup, right? I don't have this urgency to be in trades because I need to make money or I want to make money. Okay, I have other money coming from other sources. So again, that takes all the weights off your shoulders. Trust me, when it comes to showing up to the charts, you will progress quicker, in my opinion. Not everybody. I know so there's some people out there that can trade only and do very well for themselves. But I'm saying for the most part, you do want to be having other sources of income or other source, just a little bit of money coming in to pay the bills, just to get that weight off the shoulders, okay? Because when you don't want to be showing up to the charts with the mindset of I need to take a trade. That right there will be your downfall. I promise you. The lack of patience, the lack of discipline. If you just want to show up to the charts every single day and take a trade, you will be burned. I promise you. Um, so yeah, just wanted to quickly mention before we get into the charts that like if you guys do have sources of income right now, that's good. If you reach one, two, three, four, five payouts, I promise you, please do not look to quit your job right away. Um, Builds other sources of income. Maybe you want to learn another skill on the side, to build another, maybe I don't know what any sort of online thing, but don't quit your job right away, please. That's the biggest mistake people make. Um, let's say you did quit and you're learning trading right now, maybe look to pick something up on the side. Okay, like I said, afternoons, night times, or whenever you have off the charts time, try and make some money. Okay, because that will only help you in your trading. All right, it goes hand in hand. I promise you. Um, but yeah, little talk. Just before also, what kind of topics, what kind of things do you guys struggle with? I feel, you feel mentally or technicals wise. What are your biggest weaknesses? Again, it could be technicals, it could be psychology. I feel like for the most part, people struggle with over trading, lack of patience, waiting for the setups to come for them. Um, Very few, from my experience, struggle with pulling the trigger. I feel like people over pull the trigger. Over trading for sure. Yeah, I mean, that's a big one for people. It's a natural, and I feel like the over trading bit, I'll explain to you kind of the nature of it and why it occurs for a lot of people. Um, Human beings naturally don't like to be wrong, right? So what happens is if we don't like to be wrong and we take a trade and it's incorrect, you fight that, right? You want to be correct. So maybe you take a buy, you get stopped out. Comes a little bit lower, you take another buy, stopped out. Another buy, stopped out. Naturally, the humans we don't like being wrong in a situation. So you're gonna fight that against the market, and the market will fucking humble you really quickly if you're gonna continuously buy and buy and buy in a bearish market. It's gonna keep going down. Um, So you have to switch that mindset side setup. So if I'm ever on the charts and I'm looking at I have an analysis, and let's say I want to take a short, I understand that cool. If it comes to this level and stops me out, I'm completely okay with it. And you have to convince yourself, you have to get yourself into that mindset of it's fine if I'm taken out. Okay, that just means my setup's invalidated, and I'll wait and see if there's another one that comes along in that session. And if not, shut it down for the day, show up the next day, and we do it all again. Okay, you have to have respect for yourself in this industry, and like you have to have this cutthroat approach. If you're going to be this person that lets emotion um get the best of you and take control of you, you will never fucking make money in this market. It's just literally impossible, guys. You have to be as numb as possible in making money, sorry, with money and in just trading as a whole. Over trading, lack of patience, taking too many low prop setups in between. Yeah, and that's another thing. um People in the group, from what I can see, is when they show up to the chart, they'll mark out the correct liquidity level or the correct area they want price to come to. But what happens is price will come up, okay, and then we'll have a nice reaction down, maybe running some sort of high over here, okay, and now you guys are just induced by this reaction. Now you're going to continuously look for shorts, and then it comes down here, comes back up, takes the high again. Maybe you know look for another short, and then another one, you take another short, and then it goes down. Okay. And you're like, oh yeah, I'm in profit finally. Comes up, takes you out, another stop, comes to your actual level that you wanted to short from, and then goes. Okay. This is just lack of patience. Understand this. Again, this mindset. When you show up to the charts, you mark out these levels that you want price to come to. You want to buy below here, you want to sell above here. Wait. If it doesn't come to those levels and it goes without you, it is completely fine, guys. It is completely fine. Okay? Be strict, be disciplined. Okay? It's only going to help you. Because don't get me wrong, there might be some moves you're going to miss in the long run, but you'll be avoiding so many losses in between. Your strike rate's only going to be higher, your P&L's only going to improve. from doing these things. Stay disciplined. You're not going to catch every move. It's fucking impossible. Okay. As you progress as a trader, you will be able to identify more moves. But what I'm saying is in the beginning phase, in the learning stages, and as you're trying to reach that level of consistency, less is more. Okay. So have these levels marked out, trust them. And again, tell yourself that if price doesn't come there and runs without me, it wasn't meant to be. I'm not supposed to be in the trade. Maybe I'm not at that level yet, and that's completely fine. Again, as you progress and as you learn more, you'll get to that level where you'll be able to catch more of these moves. All right, you'll be able to have more higher strike rate, more precision. These things just come with experience. I can't give you that. Experience only comes from you coming on the charts and getting those reps in. Over trading for sure, lack of patience. My old strategy was taking 2 to 3 trades a day. Need to snap out of that habit. 2 to 3 trades a day is diabolical. Do not do that. Um, some people have systems where they can do that, and that's fine. But I'm telling you, it is not needed. It is not needed at all. 1 to 3 trades per week is all you need, and that's the mindset you need. If you end the week with 2R, that's a pat on the back. Like a 1 win, 1 loss, 1 to 3 and a loss, 2R. That's amazing. You have to understand something. 2R might not seem like a lot. Maybe you wanted 10R, 8R, 6R, whatever it is. 2R is better than -5. It's better than -8. It's better than blown accounts. Anything positive is great. You're already ahead of 90% of people, and you have to remind yourself of that. Okay? Sure, if you're trading a small account, 10K, 25K, 2R on like 1% risk on 25K is $500. It might not seem like a lot, but again, remind yourself that 90, whatever it is, 95% of people that are on these charts aren't even seeing blues, aren't even seeing the positive. Okay, so again, if you're in the positive, that is a plus as it is. Overthinking, overanalyzing setups. The overthinking, overanalyzing is, I'll give you the direct answer for that. It's just a lack of confidence. Okay, it's a lack of getting the necessary reps in. The more confidence you have, the less overthinking will occur. The less overanalyzing will occur. And again, that just comes back to confidence. Greed, desire for money. And again, I said the greed, desire for money. You might not have a lot of money in the bank account right now. Maybe you don't have a job at the moment, so your only income is coming from, or you're hoping is going to come from trading. People's emotions heighten when it comes to money if they don't have money, okay? Or if they don't have money coming in. That's why I told you guys at the beginning of the webinar, if you guys have some sort of source of income coming in on a consistent basis, um, keep it. Keep it as long as possible. Okay? It'll only benefit you. It'll only speed the process up of you making money from trading. Okay? The people I know that struggle the most are the ones that don't have outside sources of income right now. Other money coming in. Okay? And trust me, there are so many ways of making money nowadays, guys. Like so many online businesses that need editors, graphic, like pick up a little skill on the side, right? If you make a couple $100 a week from editing online videos for creators around the world, you could do that straight from your trading setup, right? There's so many different ways. Grind, make those a couple extra dollars right now, because again, it's only gonna speed the process of you making money from trading. It's gonna make it quicker. I think it's because I feel as if I'm not in the trade, I'm slacking, being lazy. That's another thing, and I've spoken about that a lot in the group. Um, People naturally, and I think honestly, I went through that in the past as well. I'd feel like I'm at the chart, I'm not in a trade. Like, am I really progressing? Like, am I doing the right thing? Yes, you are. Understanding when not to be in a trade is a skill on its own, and you actually are progressing. You're building discipline. You're building patience. These kind of skills are the kind of skills you need long term to make it in an industry like this. So don't feel that if you're not in a trade at that current moment that you're not progressing. I promise you, you are in some way, shape, or form. Feeling of overtrading is vanishing away from my trading. That's what I like to hear, Pri. I know we've been working for the last couple of weeks, so that's good. Overtrading is a killer for a lot of people, honestly. I used real account, but I lose 500 euro. But now I use demo accounts for practice, which is the moment to pass again in live account. Okay, so Luke, I believe you're new to the content. You're new to the system and strategy. So I feel like trading any sort of live funds right now when you're new to any sort of system or strategy is just not the right way of going about it. My opinion is just live test right now until you understand the system. Once you understand the system, start doing some sort of funding challenges and definitely start from the bottom. A 10K account, 25K account. Yeah, I know you don't lose money with the strategy, but you have to understand, Luca, you're new. So you might experience a couple wins right now, but you haven't experienced the whole you need to give yourself a couple weeks to collect data at least. Right? 1 week, 2 weeks is nothing. It's not gonna do anything for you. At least a month, at least 6 weeks, 2 months. You need to be collecting data for a longer period of time. Right? Like I said, a couple weeks is not gonna do anything for you. It could be you could have a wonderful week 1 week, and the next week comes along, different market condition. You're like, what the hell? I don't know what I'm doing anymore. So give yourself time. Live testing is, in my opinion, is the best thing you can do for your trading. Back testing, the only thing back testing will do is if you're testing something, maybe something new you're adding to your trading, um, or you're just trying to understand the system, right? You just want your eye train your eyes as much as possible. There comes a point when backtesting doesn't do anything for you anymore. Like a lot of people come to me, they're like, "Can you do a session of like backtesting on a call? All of us can just backtest together." It does nothing. It will do nothing, absolutely nothing. The most beneficial way of you guys progressing is, and if you're not trading live funds, is to live test. Show up to the charts and act like you actually are trading live funds. Put a sell or buy tool on and live test like that. Journal everything, collect data over the course of, again, at least minimum a month, 6 weeks, 8 weeks. Okay, these bullshit 2 week, 3 week things, it doesn't do anything for you. That's not enough data. It's just it just doesn't work like that. Live testing again is, in my opinion, the most beneficial way of testing. No emotion and back testing. Yeah, no emotion and back testing. But then again, like people will not take it seriously. They'll rush back testing. Like it just doesn't make sense. If you pull up to the charts and you're tracking live price, and you're applying your drawings and you're applying the system to live price, that is the most beneficial way of trading, or sorry, testing, in my opinion. Okay, and again, that comes from my experience. If I'm ever like for example, I've recently got into futures this year. I took about 6 weeks of live testing futures. Okay. Where I would, and I was still trading FX, obviously, but I would show up to the charts and just plot buy and sell tools on. I get used to the timing. I'd understand how to enter positions, how to exit positions, because obviously it's a little bit different with futures. But I gave myself time to test, live test. So I threw on some sell tools, some buy tools, and again, I just collected data and I tested for a couple weeks before I started putting money into it and I started buying challenges or set up a personal account, whatever it is, right? And that's been my transition right now. Now I'm doing challenges with some firms, but that's what's necessary, especially when you're transitioning into a new asset or a new market. All right, cool. um, let's see, man. The markets right now, stock market at least, like the futures, so like the indices look very interesting right now. I'll tell you, and I put it a forecast in. I believe I put a forecast in the Discord, but we should be coming to the downside and quite heavily to the downside, and I'll explain to you why. What I see at least. So we printed this high back in end of or mid December-ish. Okay, then we sold off and kind of created this structure liquidity for retail. After that, price came up to the highs, went bullish. Now you gotta ask yourself, where did we go bullish from? Look at this price action we got to the left hand side over here. Okay, this is just a buildup of liquidity, right? This is on the daily time frame. If I open this up on the hourly or the 4 hour, this is just gonna look like this. That's all this price is right here. Oops, just like this. All right. But you can see in the beginning of mid-January, so a month later after printing this high, we sold off to the downside, respected this liquidity. Okay, which is now built even more liquidity below these lows. So now we have that reasoning to short to these lows. Okay, that's the important part. There's that logic there for us to short to these lows now. But you got to take it step by step. Just because we respected it and moved away doesn't mean we got to automatically look for the short, right? So a lot of people probably thought we traded above this high. So let's look for that short to the downside. No. Remember, trusting your liquidity points. What do we have right here? Oops. What do we have right here? we have liquidity left for us. It is simple structure liquidity right here, right? Look how price went long here. Price went long here, went up, took out this high, and then had a rapid sell-off to run some internal. People would have thought from this point on that this was going to be the sell back down. No, no, no. It doesn't work like that. There is still liquidity left at the highs. Okay? So, price engineered liquidity at the highs. Okay? Now we have that reasoning to push this high. We get a sell-off, run internal, respect liquidity block. Oops. Respect liquidity block. Okay? Print that low. This was on Tuesday, so I believe, yeah, this was a low of the week that week. Let's open the PA. We'll go to the 4 hour here, and you'll get a good idea of what it looks like. But look at this rapid sell-off. What was the point of this big, quick sell-off here? On the way up, we simply just induce buyers. Okay, look at all these internal lows are just buyers left in the market. Okay, and this sell-off, what it does is we get a sell-off in a bullish environment, meaning we want price to show up at these highs, but look, we just got a false sell-off in bullish environment. This is an immediate buy back up. Okay, the purpose of this sell-off here was just literally to liquidate early buyers, and that's what we did. Okay, now once we take out these lows, and we ended up running this last low down here, and then we've gone bullish. Now, your eyes should automatically be glued to these. Okay, think about this logically for a second. This sell-off that we got here, we didn't take any liquidity. Look, the liquidity was above here. Now, if you trusted yourself and understood that, you would have marked out that high and waited for that high to get taken, right? And then once we sold off from there, we had this false sell-off to the downside. Again, your eyes need to be glued to these highs right away because that's going to be the draw on liquidity. That's where we're going to be running to next. Okay, this is where sellers are in the market right now, and in order for us to move lower, we need to take out those sellers. Okay, and then again, don't forget about these lows down here. We've respected this low and moved away. So now we have liquidity down here. Okay, so again, once we take out this internal point up here and we start moving bullish to the upside, you need to be gluing your eyes to these highs. So let's go into the 1 hour here. Perfect. If we have liquidity above these highs, look what happens here. Price bumps its head back into these highs. We understand there's liquidity. And look how we get another reaction to the downside. Why? This just, again, induces sellers. Look how much liquidity we have at the highs now. It just does not make sense logically for us to just respect liquidity like this and sell off to the downside. That doesn't make any sense, right? Again, what's the purpose of this sell-off here? Internal lows, liquidity block. So it runs for that last low. Boom. This is liquidity block. That's why it's respected. There's no liquidity there right now. Now that we've respected it, it moved away. Now we got liquidity there and we got liquidity here. Okay. So now everything's starting to piece together. Look how, excuse me, as we're moving to the upside, we're building liquidity to the downside. Coincidence? After we induced higher to the upside, now we have a reason to run to the downside now. All right. Let me get rid of this just for now. Cool. So listen to me carefully right here. And this is how you keep things as easy as possible. We have a bias to the upside. We just received a false sell-off to the downside. Okay. False sell-off in bullish environment. This is, again, once this sell-off is done, any sort of buy opportunity, or all you should be looking for, sorry, is buy opportunities. So we take out that last internal low. All of these runs of liquidity to the downside are opportunities to buy. 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 Here doesn't look like there's anything clean. Down here, buy. Down here, buy. Down here, buy. All these runs of liquidity are entries into here, and then finally into here. So if you identify direction and bias to the upside, all you have to do is wait for some sort of false sell-off to the downside and then ride the wave back up. Because what that sell-off does, again, in a bullish environment, okay, we want price to the upside here. This sell-off from A to B has simply just induced sellers and provided us essentially another leg or range, you could say, to be trading from. Why? Because sellers see this leg, again, from A to B as a BOS to the downside, right? It comes off the back of a POI. So look, we took this low out here. This is a BOS for retail. Okay. So they're going to be selling from these areas up here. We understand that. We understand that there's going to be liquidity above these highs now. So we're going to be targeting that back up. So again, just to keep things as simple as possible, identify direction. So in this example, we're bullish. Okay. Wait for a false sell off to occur. Okay, the false sell-off occurs because we had a build-up. Here's your build-up. Look, build-up of liquidity. False sell-off occurs. Same thing on all time frames. Build-up, false sell-off occurs, moves to the upside. Okay, build-up happens here. We take out the low, false sell-off to the downside, buy back up. Okay, same thing here. Build-up, false sell-off to the downside, move back up. It's the same thing over and over and over and over. But the thing that people struggle with, most people struggle with, is the lack of patience, waiting for this to occur. This move from A to B. What this move does, it provides us direction now, it provides us an opportunity to ride this thing back up. Wait for these moves to occur. Again, if you're bullish, wait for that false sell off to occur. If you're bearish, wait for that false bullish move to occur. Okay? So, again, something like this, for example. Let's say we have liquidity to the downside. Okay? Price is trending to the moving to the downside like this. Look how we're building liquidity. Boom. We understand there's liquidity below this low. We end up coming below this one. Okay. Creates this false bullish move in a bearish environment. Sell. Okay. Again, what people struggle with is waiting for this to occur. A to B. That's what most people struggle with. Okay. Because what happens is a lot of you guys will wait for price maybe to come above here, comes down, you get stopped out. Maybe, okay, maybe up above here. Comes down, stopped out. And then finally, you took two L's, the actual move comes along. Lack of patience. Okay? It's not a lack of understanding, it's a lack of patience. It's a lack of discipline. Most of you guys probably had this high marked out in the first place. I can promise you that. But you see how the market just does the same thing over and over? When I was drawing this for you guys right here, high, high, high. We took out this, pulled back. Took out this, pulled back. Then finally, we take out the actual liquidity that you had marked out. Look at this. While we were inducing sellers, we were building liquidity to the downside, induced higher for us to trade lower. Boom. If you just waited, and the thing is, another thing, if I zoom into this, this can be like, look, this could be like 1, 2, 3 trading days. Finally, the fourth trading day provides your opportunity. Sometimes the market builds liquidity on the higher time frame, right? And you guys don't have the patience to wait 1, 2, 3 days before that fourth day comes along and the golden opportunity comes along, right? That golden opportunity to take that short back down. For trend, you use external and internal or only if price touches. I don't understand the question. And that's fine. I don't understand it because you're new to this whole system, which is fine. I don't For the trend you use external and internal. I don't understand, brother. But again, lack of patience, lack of discipline. And like this scenario, this diagram I just drew out for you guys. Picture this on like a 1 hour or a 4 hour. Monday, no trading. Why? It's just building liquidity. Tuesday, Number two, no trading. Third day is Wednesday, no trading. All this is building liquidity for us, right? And then finally Thursday comes along and there's that trade. The higher time frame builds liquidity sometimes, guys. So there's not going to be a trade for 1 day, maybe 2 days, maybe 3 days even, right? But if you guys don't have that patience and you're just predicting where price is going to go all the time, maybe you took a loss on Monday, maybe you took two losses on Wednesday. Finally, Thursday comes along, and you could have just waited for that the whole time, but you've already taken three losses, right? Your confidence is shot, your mentality is shot. For 4 hour, I identify external and internal, and I wait to touch. Okay, again, brother, just because I don't understand what your questions are. And again, that's just give yourself some more time. Give yourself another week of studying all the content. Okay. Um, because like for example, you're saying 4 hour I identify. There's no specific time frame to identify anything other than maybe going on the daily or the weekly and identifying daily highs, lows, weekly highs and lows. Yeah, just see the video again. Um, there's no specific time frame for one thing. Whatever time frame makes sense on your screen at that current moment is the time frame you're going to use. One thing I've learned is to wait for the extreme internal liquidity to get swept. It will save you from a lot of losses in between. Yeah, we can discuss maybe like an example on that actually. Let me delete these drawings. Um, let's see. So, bullish environment, wait for that false sell-off to occur. False sell-off occurs. Okay, maybe it's coming off the back of a trap to the left-hand side. And then let me do this. Uh, okay, so let's sit in this scenario. We want price to the upside. Okay, we have a direction. Okay, we want price to up to this blue line. Why? This is where sellers were selling from. That caused this false reaction to the downside. So right now we're in this bullish environment. Okay, meaning we have a direction to the upside. Now we need some sort of entry to come along. Okay, look what we have here. Equal lows, relative equal lows, structural liquidity, whatever you want to call it. So what I see a lot of the time is people will want price below here, which is fine. How many times does this happen to you guys? Actually, let's draw it like this. Okay. I can promise you how many pictures I have gotten or DMs I have gotten with this exact scenario. I've answered this question a million times. People will send me this exact chart right here and be like, "Can I buy below here?" Remember, and I believe I spoke about this in the last webinar. Almost always, when we take some sort of liquidity from the left-hand side, this occurs. How many times do you guys see this occur? We take out the liquidity from the left-hand side, we take out high, we take out low. Okay? Again, look how we overall we want to be in a bullish scenario. We just had a false sell-off to the downside. Then the market will do what we want it to do. Exactly, almost every single time this occurs. So a lot of people's L's come like this. It maybe even deuces higher once more. Happens sometimes. Boom. Maybe news was here or timing, whatever it is. This occurs so many times. And then you guys are like, cool, we just trap buyers. Now we buy again. It goes up and then boom. Finally, the move occurs. You guys just took one L here. You guys just took another L here. And then it comes down and you weren't even able to stay in the right move the whole time. Or sorry, you weren't even be able to get in the correct move the whole time. Has this happened to people? Again, lack of patience. That's all this is. Look what we have right here. We took out liquidity from the left-hand side, and then we had a reaction up and built liquidity right here. Getting PTSD. I'm telling you guys, like I've been through it all. I name it. I've been through it, right? And I'm telling you guys this from experience. And I can say the biggest killer for people being able to stay consistent is a lack of patience. Okay, a lack of discipline. If you just waited for these lows in the first place, you would have been able to avoid all of this bullshit. Okay, this whole buildup of liquidity. And again, why did this occur this whole time? This occurred to just build liquidity to the upside for us. This induced sellers on the way down. Finally, takes out that liquidity. You could either take this buy right away with your stop loss below the liquidity block, or maybe you can wait for inside here. You wait for, oops, sorry. I can't even draw. Let's do this. You wait for this. Yeah, and sometimes it doesn't come to the extreme. That's fine. Okay, and that's the thing. And most of the time, if it doesn't come to the extreme, it's going to be left for later. And then once it does occur, you're going to be like, holy shit, it all makes sense. Okay, look at this example. Let's talk about, and I remember this from maybe 2 weeks ago. Second. All right. So this is price action on euro. Okay. We have taken out internal liquidity from the left-hand side, building us a liquidity block. Look what we have right below. If I go on the 5 minute, this price action right here. Okay. Very simple stuff. All this is, if I draw it on a diagram, literally like this. Okay. This high is right here. That's all this is. So there's liquidity where? Right here. Right? In other words, right here. Honestly, if you want to just mark it there. Get rid of this. There we go. So we understand liquidity's right there, right? Look at the price action did over here. It never ran it. And then you're gonna be like, okay, but it took this high. Maybe I can go into the lower time frame and find an entry here. Why? Why would you do that? Why would you confuse your trading? Why would you make this more complicated than it needs to be? The liquidity's right here. It's literally right here. As simple as that. It's structured liquidity, right? If retail sees the market break structure right here, they're selling right here. Okay, the market comes up, respects it, moves away. Simple stuff. There's friggin' liquidity above this high. Simple as that. There's liquidity above that high. Okay, so watch this. People are gonna be like, "Oh, how can I get in this short right here?" No, there's no liquidity there. Why are we gonna be trading from this high? If I play out price, the 1 hour. Actually, you know what? Let me just exit out. You guys will see. Look, remember that high marked out? All for a reason. If you just waited in the first place, okay, instead of complicating things and being like, how can I get in this sell right here? We had a big sell off. No, the liquidity's up there. Guys, keep it as simple as possible. Look how we spike that liquidity, mitigate that liquidity block, move away. Right? You have resting liquidity target in the other direction. Boom. See what I mean? But the problem is, again, it always comes down to the lack of patience and the lack of discipline. There's so many L's people are taking in between somewhere, trying to find it in here, or on the way back up, or even maybe trying to sell, saying, "Oh, this is a liquidity block, though. Shouldn't we sell from here? This is a liquidity block. It's another one. Oh, it's a liquidity block, and we blew right through it. Why? Simple stuff. All right. Possible to buy into if relevant liquidity is taken, or you just wait for sales. 100% it's possible to buy it back into. What I like to do is if I know there's liquidity up here, the market comes up. Let's use the replay tool. Uh, Perfect. So I don't think it ended up actually happening, but if I have a direction to the upside right now, meaning there's liquidity right here, right? Let's say the market comes up, boom, and we get a false sell off to the downside, for sure, trade this thing back up. Okay? Take it if we got a liquidity block down here, we have one right there. Or again, you wait for maybe this occurs. Now you wait for another low to set in. Low taken. You have liquidity block to support your buy entry. You take buy right here. You can target here, or if you want to get a little more refined, which I don't recommend doing, just keep it simple, target right there. But yes, 100%. It's just goes from liquidity pool to liquidity pool. Now, if this sell, look, bullish environment right now, false sell-off occurs. Simple stuff. But again, the thing is, if this sell-off doesn't occur, I'm not buying it. Okay? But to answer your question, Connor, yes, for sure. As you get more experienced as well, you'll understand that you'll be able to take more of these entries. You'll see more entries and stuff like that, more opportunity. Okay, at the beginning, you're not going to see all of it because you're going to second guess, be like, oh, maybe here, maybe there. But as you grow and as you experience more, and get more reps in the market, you'll see that there is more opportunity than you think there is. Cool. All right, I'm gonna leave the rest of the webinar for you guys. Any questions? Hope you guys took enjoyed this one at least. There was some good stuff we talked about, especially on the mindset side of things. Hopefully, I opened your eyes up to. Oh, sorry. Yeah, Elijah said you actually have a video on the scenario direction bias. Yes, sir. Some good stuff. Yes, sir. Always. I'm talking to you guys from experience, right? Like I said, I've experienced all the highs and lows of trading. I swear to God, there's been months where I've made money I think it's never not even possible, right? And then I think I'm Bill Gates. Okay, but no, the market will humble me really quickly. It doesn't give a fuck about how you feel. What's happening to yen pairs fundamentally? I have no idea. I have no idea. Um, Simon Khan, just rewatch the recording, brother. Rewatch the recording. Bro, what's happening to yen pairs fundamentally? What is happening to yen pairs? I don't know. Is something happening? Honestly, I don't really know what's happening fundamentally ever, unless I see it on Twitter or something. I just use these freaking charts. The charts tell me what's going on fundamentally. Peep gold futures. I actually added gold futures onto my list. I don't know if I'm going to keep it around, but I'm going to test around with it. But yeah, look at this. Where Elijah? What was the buy you're talking about? You talking about down here? I just have one pair. How many pairs do you recommend to trade? Um, 2 to 3 is max. 2 to 3 is max. Yeah, let's take a look at this, Elijah. So price takes out this low from the left hand side here. We get false reaction up. Look at this. Induce buyers. Build up a liquidity. We induce buyers again. False sell off to the downside. Perfect. That's what you want to see. Takes out low from the left hand side. So now we're bullish, right? But again, we need to see the same thing occur. A build up and a run of it. What do we get right here? Induce buyers. Price respects the low, moves away. Now you want to see price below it. Boom. Clean buy. And I believe you could honestly, I probably would have just kept it up below here. Sneak in a nice 1 to 3 somehow like this. I don't even know if you're gonna be able to do that. Let me see if I can refine this. There. Just use the 1 hour. So look at this. This is what I do sometimes. Honestly, if I can't pick where I want to be having my entry from, look at this. Look at the 1 hour it gives you. So here's that 1 hour liquidity block. That last low before it. There's your 1 to 3. I was a little intricate. Yeah, that's fine. I believe there was maybe like a 5 minute. Was that respected? Not really. Could you explain US 30 shorts on Thursday? Let's take a look. Are you talking which you use order limit? I only use order limits on futures. Could you explain you okay, Salman Khan, which feed are you talking about? US 30 USD? This one? On Thursday. Oh, this was clean. Okay. Was this Thursday? This is Wednesday. Thursday, I would not have. Oh wait, shit. Sorry. Yeah. Oh, the entry would have came in. Well, it's not bad actually because it's indices. But the entry actually came on Wednesday. Why? Look. Okay. Induce sellers, induce buyers, sell off to the downside. This is a false reaction at the low. Okay. This is to build liquidity at the low. So buyers are entering positions here. That's fine. Let them do that. It goes to the upside. We induce higher here. Look to the left. This is where sellers were coming, entering the market at. It literally spikes them out to the T. Again, timing is a bit tough, especially for people that are not very familiar with indices. But this is Wednesday PM session. And then it looks like Thursday London session maybe gave another. Yeah, it did. Same thing. Keep it as simple as possible. Induce sellers here. Okay. We get a buildup of liquidity at the lows down here, which is nice. Okay. And then we trap sellers, liquidity block. Anywhere above this high here is a sell entry. And where do we target? Buyers entered here. Simple stuff. You can target this low from the left-hand side we have marked out, or you just target like this. Posted in cord. Let me take a look. Open in browser. Oh, I see what you did. Let's take a look with everybody. This is how he took it. So liquidity taken from the left-hand side, buyers trapped, early buyers trapped, and then he looked for a confirmation. Oh, I see. Yeah, yeah. That's nice. So you have liquidity block down here. You wait for that last low to get taken. Price taps in. This is your buy entry. Anywhere below this red line I have marked out is buy. Yeah, it's clean. And you just target liquidity to the upside. Honestly, targeting right here is perfect. Boom. Why? Because look what the market did. Induce sellers here. So they're gonna have liquidity, boom, above that high. And I believe, yeah, Elijah targeted that perfectly. Nice, good shit. Good shit. Cool. Good stuff, guys. We're gonna wrap up the webinar here. Again, there's some good stuff we went through in this call, honestly. So please rewatch. It'll answer probably a lot of questions for you guys. Alrighty. But yeah, we'll wrap up here. Hope you guys have a good rest of your weekend. Um, yeah, I'll see you guys back in the Discord for this week on Monday. Thanks, Sensei. No worries, guys. Take it easy, all right? We'll talk in a bit. No worries, boys. Take it easy. Ciao.